Top of the morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for October 16th, 2018. So, hey everyone, we got a market that's looking positive this morning, trying to pop up. We've got futures that are happy. Overnight, Asian markets were mostly higher. And European markets are currently showing signs of holding on to modest gains this morning. And earnings this morning are rolling out in a very quick pace. You know, we've had earnings from Morgan Stanley and Goldman Sachs and BlackRock, and, you know, they're just continuing to roll out this morning. And we're getting good results. And consequently, the market is showing a gap up open reversal. So yesterday we ended up finishing down 89 points in the Dow and looking lower. And now this morning we're getting a gap up that's significant of about 120, 130, 140 points, somewhere in that range. And that's likely to move around considerably before the open yet. But as we continue to show bullishness this morning, please keep in mind that we're going to have to watch these areas fairly closely. We have significant levels of resistance that we still have to break through. And so don't get too caught up in all the emotion and drama of the day. Remember, we've got a lot of recovery here to do. So be careful. Now, we are getting a response to the 200-day moving average. That is a positive sign. But we want to recognize these potential resistance areas, maybe here, and all the way up into that 50-day moving average, where we could start to see resistance come back into play. Now, remember, a true V bottom is very rare in the market. Typically, we're going to move down, we're going to move up, we're going to bounce around. We may even create what is called a double bottom or a W-type bottom before we rally. So this will likely take some time. Now, the thing that could change that is, of course, all of these earnings. If earnings just continue to roll out very, very positive, and the guidance from the company continues to remain positive and strong, we could see this market rally right back up. So watch it closely and just be really careful. Now, several things that you can do to prepare. What we're going to probably see is an awful lot of volatility in the market. That means overnight gaps and lots of potential overnight reversals could occur. So some things that you can do. First, be careful not to chase. Don't chase a morning gap. Wait until you get proof that there's actually going to be some follow-through buying or selling. Second thing, make sure you're planning your trades carefully and understand the risk of a trade and have an exit plan before you ever enter, just in case you're wrong, and to avoid those emotional decisions that can occur in the heat of the moment. Also, make sure that you are considering your position size. One of the ways to handle a very volatile market is to reduce your position size to lower that risk. If a market happens to gap in your favor, make sure that you respond to that favorably. We like to say in hit and run candlesticks and right way options, we like to say gaps are gifts. And when a gift is presented to you, it's pretty wise to normally take some or all of that gift and pack that away into your account. So remember, gaps are gifts. If they move in your direction, be willing to take those profits. Also, prepare for a faster paced market. Lots of fast price action, particularly in the morning around earnings events. During that fast price action, be willing to take profits a little bit quicker, scale out possibly to help deal with some of the volatility that we're likely to experience over the next few weeks. So with that, let's go ahead and continue to take a look at our markets here. Let's take a look at the SPY. SPY also gapping up this morning. You can see we're getting a gap up reversal so far this morning. Keep in mind that that gap up is still below the 200-day moving average, not exactly healthy. So we're going to have to watch that 200-day moving average as a possible resistance, this gap up. Remember, we don't want to chase just in case we happen to get that gap up and then sellers jump on that opportunity to push it lower. So wait for that gap to occur, wait for real buying to step in, and then we can possibly move up with this market. Watch it closely. If you're already in a long trade and this gap up is going to provide you a profit, consider taking some of those profits off, packing it away, and just be thankful that the market moved in your direction this morning. Let's take a look at the Qs. The Qs also getting a gap up open. Let's be very cognizant of where we are. We are above the 200-day. That is a good sign. But a bounce up into these resistance levels, we want to watch these levels very closely, because any failure here could certainly bring the bears back in very strong. Now, one thing I want to point out is Netflix. Netflix reports earnings after the bell today. Netflix is one of those big FANG companies that is kind of almost a psychological influencer of the market. If they happen to report poorly or guide lower, we could definitely see this poor tech sector that's been struggling so much. We could certainly see that continue to add pressure to selling. Let's hope that doesn't occur. Let's hope they produce a good report and show signs of strength. But this afternoon, this report could be very important to the overall psychological feeling of the market. So kind of keep an eye on that. Let's take a look at IWM. IWM, this poor guy, terrible shape here, well below the 200-day moving average, just really, really sick. Even though this is gapping up a little bit this morning, notice it's really not a substantial gap up. This has a lot of work to come back just to the 200-day moving average. So watch these fairly significant resistance levels in here, and always be watchful of potential failures that occur at or near resistance for an opportunity to take profits or maybe to take a short position. So be really, really careful. Let's take a look at the VIX. Now the VIX responded a little bit higher yesterday, giving me just a little bit of concern that we were going to move up, pull back, test the support level, and move on higher. Now this morning, with this gap up and the bullishness showing in the market, we could easily see the VIX move down below this little support level. And that would be a good thing for the market. See a little bit of that fear dropping out of the market. So kind of keep an eye on that. We want to watch this VIX carefully. If that fear starts to creep back in, it could get explosive pretty quickly. And let's take a look at T21, 22. The T21, 22, whoops, there we go. The 4-week new high, new low ratio. All this is a ratio between stocks making 4-week highs and 4-week new lows. And if you take a look here, we have been pretty darn bearish here for a while. I don't like to use the word oversold. I think terms like oversold are very predictive in nature. We are certainly extreme to the downside at the moment, where emotions have been very bearish, and now we're down here in this potential bullish reversal zone. So we do have plenty of room to move higher here if the market can gain some traction and move up. So let's keep an eye on that. But also remember, because we did bounce yesterday, there is the possibility of that retest down here. So kind of keep that in mind. I'm kind of encouraged by the potential of a bullish bounce right now in the market. But I would also caution you that the emotion in the market could make this very challenging trading, with a lot of whippy price action, intraday reversals, and things. So we're going to have to be on our best behavior and have very good planning into your trades to navigate what's probably going to be some challenging price action over the next several weeks probably. So keep that in mind. Let's take a look at the economic calendar here this morning. Economic calendar has several things to be aware of. We have industrial production numbers here this morning at 9:15. Housing market, by the way, expected to stay flat on industrial production. Housing market index expected to decline just slightly, and the jobs report expected to hold on strongly. We also have the Treasury International report, but I wouldn't expect that to really move the market around much this afternoon. It'll be Netflix that's likely moving around the market this afternoon. So kind of keep those things in mind as you plan your day forward. On the earnings calendar, once again, we have quite a few earnings reports, and those are really going to escalate to the point where you can't, there'd be no way for me to cover everything that's reporting. So what I highly suggest you do is that you're always checking your stocks, your current holdings, and those that you're thinking of purchasing against current earnings reports. Now with my software TC2000, I can actually put the next earnings date right here on the chart. So I'm always checking earnings dates against current holdings to make sure I'm aware of what's coming and the potential that can bring in price action. So kind of make sure you're making that a habit, because we're going to see lots and lots of earnings coming out in a very fast pace in the fourth quarter, and a lot of emotion is tied into this right now. So make sure you're checking, planning, and preparing for that risk. With that, everyone, hey, I want to wish you all a fantastic day, and I want to wish you great profits. Hey, if you don't mind, do me a favor, click that subscribe button on YouTube and the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I truly, truly appreciate it. You guys are the best. Thank you very much. And also, always feel free to share these videos with any friends and family. Everyone, take care. I wish you a great day of trading. We'll talk to you all very, very soon, bright and early Wednesday morning. Have a good one.